I think it is an anti-fragile asset, and every one of these crises strengthens it. The network becomes stronger and healthier. The price is extremely volatile, as is the case with most innovations and new technologies in their early days. We think that the entire ecosystem is going to appreciate from $1 trillion today to $25 trillion by 2030.
Cathie Wood is an American businesswoman and investor who is the founder and CEO of ARK Invest. Cathie Wood has a proven track record of managing assets worth over $60 billion. Wood and her team at ARK Invest are often cited for their successful predictions and early investments in companies that have gone on to see significant growth. One of Wood's most successful predictions was her early investment in Tesla, the electric car manufacturer. ARK Invest was one of the first investors to see the potential in Tesla, and Wood and her team began buying shares in the company in 2013 when it was trading at around $10 per share. Today, even after collapsing 60%, Tesla is one of the largest and most valuable car companies in the world, with a market capitalization of over $500 billion as of May 2023. Tesla's stock price is up 10,000% since Cathie Wood first bought shares. Wood has also made successful predictions in other industries such as genomics, robotics, and artificial intelligence. ARK Invest was an early investor in companies such as CRISPR Therapeutics, a gene editing company. Cathie Wood has been a long-term believer in Bitcoin and has consistently argued that it has the potential to disrupt traditional financial systems. In a recent interview, Wood stated that she believes Bitcoin could reach a price of $500,000 per coin in the next 5 years, and ultimately $1 million per coin, because the opportunity and potential for disruption is huge, approximately $25 trillion. Cathie says that last year was bad for Bitcoin because of other less transparent companies pulling the rug out from under innocent investors. But in 2023, this has changed. Cathie Wood says now is the time for individual investors to start investing as little as $200 per month to become a millionaire. Cathie Wood's $1 million per Bitcoin prediction is based on her belief that Bitcoin is a better store of value than gold, and that institutional adoption of Bitcoin will continue to drive its price higher. Wood has also been bullish on the potential for Bitcoin to be used as a medium of exchange, citing its speed and low transaction fees as key advantages over traditional payment methods. She has argued that the increasing acceptance of Bitcoin by merchants and consumers will help to drive its adoption and its price higher over time. Cathie is known for her bullish views on decentralized cryptocurrencies such as Bitcoin and Ethereum. She believes that these cryptocurrencies have the potential to disrupt traditional financial systems and create new economic models that are more transparent and efficient. Wood has spoken at length about the benefits of decentralized cryptocurrencies, such as their ability to provide financial freedom to individuals and bypass centralized control of governments and financial institutions. She's also praised the blockchain technology that underpins cryptocurrency for its potential to create more secure and transparent financial systems. In addition to Bitcoin and Ethereum, Wood has also expressed interest in other decentralized cryptocurrencies such as Solana and Polkadot, which she believes have the potential to disrupt traditional finance and other industries. However, while Wood is bullish on decentralized cryptocurrencies, she has also cautioned that the market can be volatile and that investors should exercise caution. She has emphasized the importance of diversification and long-term thinking when investing in cryptocurrencies, as well as the need to stay informed and educated about the latest developments in the industry. Overall, Cathie Wood's views on decentralized cryptocurrencies are positive, and she sees them as a key part of the future of finance and technology.
Last year was a terrible year for crypto. But why was it such a bad year? The first reason was algorithmic stable coins. We didn't believe in those at all. They weren't rules-based, and so that was the Terra Luna fiasco. So you have to do your research in this space and not try to ride a dream of some sorts. But then if you look at Celsius, 3AC, FTX, all of them went bankrupt. Why? Why? They were centralized and opaque, not transparent at all. In fact, Sam Bankman-Fried, so SBF, as everyone came to know him, he didn't even like Bitcoin. He didn't like Bitcoin. Why not? Bitcoin is totally decentralized, completely transparent, and auditable. He couldn't control it. And of course, he thought he was a master of the universe. So Bitcoin actually, and Ether, neither Bitcoin nor Ethereum, those two networks skipped a beat throughout all of those controversies. All of the transactions cleared, all of the margin calls that were a part of smart contract, they were satisfied. So actually those crises proved the concept. Now we come to the banking crisis this year. Just think about what a proof of concept this is. Decentralized, transparent, audible networks didn't skip a beat. And here we had, stocks halted in the stock market, in the regional banking space, because there were bank runs taking place. That of course was not happening on these decentralized networks. And so I think that, as you say, digital gold has now gained even more credibility. It came out of the last crisis, the 08-09 crisis is when Bitcoin emerged, and it took another crisis for others to understand, oh, wow, maybe our banking system isn't as safe as I thought it was, and maybe I need a hedge against that. Bitcoin is a very good hedge. It's a great insurance policy. I think it is an anti-fragile asset, and every one of these crises strengthens it. The network becomes stronger and healthier, and we have metrics to manage that. The price is extremely volatile, as is the case with most innovations and new technologies in their early days. There's a lot of uncertainty. Why? And this is a perfect example. There's the old guard, and they're trying to say, we're going to wipe this innovation off the face of the earth. It has no reason to exist. And the innovation just gets stronger and stronger and stronger with time. And if you look at the measurements of the health of the network, the Bitcoin network, the Ethereum network, their health has actually improved through all of this turmoil. So that's essentially what I would say. And we think that crypto is three revolutions in one. One is the money revolution, which is what we're talking about here when we talk about Bitcoin. And that could be the biggest of the revolutions. The first global private, no government interference, a digital rules-based monetary policy with no central point of failure. Who knew Silicon Valley Bank was going to be a central point of failure? Nobody. It's shocking. But I will tell you, just in terms of setting this up a bit, the second revolution, let me do this first. Second revolution is a financial services revolution, and that's called DeFi. Many people call it DeFi. Ethereum is the network most used for this. Chris Berniski, who was our first analyst, would like to name it the Internet Financial Services Revolution. That way more people will understand it. DeFi sounds gimmicky, and I agree that might be so. But we do think that it's going to revolutionize financial services and collapse the cost. And then the third revolution, Web3, metaverse, is effectively, for the first time, digital property rights. That's a big idea too. So we think that crypto, the entire ecosystem, is going to appreciate from $1 trillion today, and Bitcoin's just a little less than half of that, to $25 trillion by 2030. These are very big ideas. Now, to get to the economics part of this, the reason we're going through this crisis is two serious mistaken assumptions that banks and bank examiners have made, and also that the Fed has made. The first is that interest rates, after we went through COVID and we were worrying about a depression, banks said they were flooded with cash from the stimulus programs. And so banks put it to work in long-term interest rates, which at the time were only really 1.5%, because they thought the economy was going to be shut down for a very long time. And the Fed told them that it thought that the economy was going to be down and out for quite a while. So they put money into securities at 1.5%, and never dreaming that the Fed would raise interest rates by 19-fold in 1 year. Well, that happened. That has never happened in history. In fact, the biggest increase that we have seen in a short period of time was twofold back in the early 80s under Fed Chairman Volcker, when he was trying to strangle inflation. But 19-fold, this is, a magnitude earthquake we have never seen in the financial system. The economic measures that the Fed is basing its policies on are old. They're based in the industrial age, and they get revised in major ways as technology begins to inform them that, wait a minute, we're not measuring this correctly. And so we think they've been relying on lagging indicators.